Okay, let's dive into this. Welcome to today's Explainer, where we're tackling what has got to be one of the most mind-bending paradoxes in the entire business world. We are looking at exactly why businesses go completely broke, even when they're actively making money. I want you to picture this for a second. Just imagine you're looking at your business accounts, and you see that you just pulled in $50,000 in revenue. You're celebrating, right? I mean, it feels fantastic. You're thinking, we made it. But then you log into your actual literal bank account, and the balance, it says exactly zero. So naturally, it makes you ask the ultimate question here. Wait, how can a profitable business go broke? It sounds like an impossible contradiction, doesn't it? But get this. This exact terrifying scenario is how thousands of businesses fail every single year. They aren't failing because they're losing money on paper. No, they failed because they simply, quite literally, run out of cash. Which brings us to section 1, the illusion of profit. You know, most folks just assume business works in this really simple, straight line kind of progression. Step 1, you sell something. Step 2, you make a profit. And step 3, you get rich. It's a super nice, clean, comforting formula, right? But man, here is the harsh reality. You sell today? Sure, but you usually get paid much later. And the core problem here? Your bills do not wait. Your rent, your internet, your payroll, they all demand payment right now. And that invisible gap, that brutal waiting period between selling, getting paid, and paying your immediate bills, that gap is what destroys businesses every single day. All right, let's move to section 2, the cash flow bucket. Cash flow is incredibly simple when you really break it down. It's just the movement of money. Money coming in, like your customer payments, and money going out, like your rent, salary, and inventory. Think of your business like a bucket. Your survival depends entirely on timing. If more water enters your bucket than leaks out of it, hey, you live to fight another day. But if more water drains out than pours in, well, you are in serious danger, even if you look super profitable on paper. So this is the fundamental difference you really have to memorize. Profit is just the scoreboard. It looks great, it tells everyone how well you're playing the game. But cash is the oxygen. And if you run out of oxygen, it really doesn't matter what that scoreboard says. The game is just over. This leads us into section 3, the deadly profit trap. Let's look at how people actually get fooled by this. Okay, imagine for a second that you're running a bustling design agency. On day 1, you send a massive $10,000 contract. Amazing, right? You pop the champagne. But then on day 15, reality hits. You've got to pay your workers, your software subscriptions, your office bills, and that all amounts to $7,000 straight out of your pocket. But the client, they don't actually pay that initial invoice until day 60. Just look at that agonizing 45-day wait between day 15 and day 60. Everything looks incredibly successful until payroll actually arrives. On paper, sure, you've got a solid $3,000 in profit. But in reality, your bank account has maybe, $42 left in it to cover any kind of emergency? It's terrifying. So the crucial point to take away from all this is that businesses do not go bankrupt because sales are low. They go bankrupt because the money simply arrives too late. Timing is absolutely everything in business. Let's jump to section 4, 4 silent business killers. Let's break these common traps down one by one. First up, late payments. Your customers delay, so what? Well, that means less cash for you, and your operations just grind to a halt. Second, growing too fast. Now, this one is super sneaky. More sales actually require more upfront spending to deliver the work, which drains your cash way before that new revenue ever hits. Third, inventory overload. This is when your hard-earned money gets physically trapped in products that are just gathering dust in a warehouse. And fourth, fixed expenses. Because remember, your landlord absolutely does not care what your sales volume looks like. Rent is still due. Now, for the good news. Section 5, how smart businesses survive. So here is your concrete action plan to make sure that that cash flow bucket doesn't spring a leak. Number 1, collect deposits up front. Number 2, invoice immediately. Seriously, do not let days go by. Number 3, ruthlessly reduce any unnecessary spending. Number 4, track your cash movement every single week, not just when tax time rolls around. And number 5, build up your emergency reserves. Taking these proactive steps ensures that you control the flow of water rather than letting it totally control you. And you know, the smartest business owners out there constantly ask themselves this one single, absolutely critical question. How long can we survive if the money completely stops coming in tomorrow? Honestly, just asking this one question changes everything about how a business is run. For a solid, healthy business, the magic number here is 90 days. Building up a 90-day cash reserve is like the ultimate green signal for survival. It gives you the peace of mind to know that you can actually weather the storm if a major client pays late or, if a global crisis suddenly hits. So, as we start to wrap up this explainer, I really want you to internalize this key distinction. Revenue, it feels exciting. Landing that big sale is a massive rush. And profit, it looks super impressive on a year-end spreadsheet. But cash? Cash is what actually keeps you alive. High sales simply do not equal survival. I want you to really think about this reality for a moment. Businesses don't fail because they stop making a profit. They fail because they run out of cash. They die when they stop having money. And this brilliantly illustrates our absolute golden rule for today. Profit does not equal cash. A wildly profitable business can completely crash and burn if it just runs out of its oxygen. So, I'm going to leave you with this final provocative thought. The next time someone brags to you, hey, we are a highly profitable company, don't just smile and congratulate them. Ask them the real question. Ask, cool, but how much cash do you actually have? Keep asking that, keep learning, and I'll catch you in the next explainer.